good evening. Hi, everyone. My name is Beat Speck. I'm a lawyer with Wenger & Vieli with a focus on private M&A, venture capital, private equity, and not surprisingly, blockchain projects. Welcome, everyone, to today's webinar regarding the new Swiss DLT trade system, hosted by SECA and the Crypto Valley Association. Why is it me who makes an intro today? It's because the managing director of SECA, Professor Pedernjana, has asked me to do so. Not least because I'm one of the few members who is active in both associations, which means SECA and CVA. In SECA, I'm involved in the venture capital chapter, and in the CVA, I'm a former member of the investors working group. And one of my colleagues in the same law firm was a member of the board in CVA. Let me allow just to spend a few words on SECA. SECA is the Swiss Private Equity and Corporate Finance Association, which is the representative body in Switzerland for private equity, venture capital, and corporate finance industry. SECA has the objective to promote private equity and corporate finance activities in Switzerland. Members are very broad equity investment companies, banks, corporate finance experts, auditing companies, management consultants, lawyers, and private investors. So they are primarily focused on either investors or advisors, but not on startups. SECA has the opinion that DLT has a future and is very keen to learn what happens in that market. So we are in particular, SECA is in particular very curious about use cases in that DLT/blockchain area. The CVA in turn is the Crypto Valley Association in Zug, which is the epicenter of the Crypto Valley, as you all know. CVA intends to build the world's leading blockchain community by connecting the brightest minds and leading companies in the blockchain space. CVA grew into a global network of professionals, startups, corporates, and investors to share the same belief, which is the future is blockchain. So we meet today due to the fact that Switzerland has introduced a new DLT law, which created first in early this year so-called register value rights, in German Registerwertrechte, a terrible word actually in both languages, but that is how it is. A few weeks ago, that law was even broadened, so newly the law also allows DLT trading systems to be introduced, which is a license for trading venues for digital assets, such as those register value rights. So the new law enables trading venues to trade DLT securities. SECA and also the Crypto Valley Associations would like to give you today insights in selected projects that are currently developed or developing such trading venues. The moderator of today, Martin Eisenring, on my screen on the top left. He's a colleague of mine, he's also a lawyer, who organized the whole event. Martin is, as I said, a lawyer and a notary public in Zug since many, many years. He's specialized in corporate and contract law, also in financial market law, as well as in blockchain-based business models. He has studied at the University of Fribourg and St. Gallen and Zurich, and he has written a dissertation on asset management of pension funds. 3 years ago, he was a visiting lawyer in a Silicon Valley law firm. He came back with a lot of ideas and input and feedback. In addition, Martin leads the investor working group of the Crypto Valley Association, which organized today's event together with SECA. He's also a member of SECA's venture capital working group, so he's one of the few, together with me, who is active in both associations. Martin, I would like to thank you already by now in organizing that event. I'm sure that you will thank our speakers on a standalone basis later on. I'm having here, I hope you can see that, a bottle of wine. It could be a topic of our next event, how to transfer real assets virtually, but that's not the topic of today. I'm very curious to learn what's happening in the space. Over to you, Martin. Thanks a lot.
Thank you, Beat, for the introduction. Thank you to all speakers and also to our audience, our participants, to be here with us to learn about the new trading venue possibilities we have in Switzerland since 1st of August this year. As you all know, we have different token models here in Switzerland, and until now, all tokens with an underlying asset, securities, they didn't have trading venues, and of course this was a problem if you create tokens but you can't create a secondary market. Now with these new venues, with these new trading venues, we have the possibility, yet we have to see how and what will be created as tokenized securities. I think it's now we have a full system in place. The products have to be launched. We will see what happens in the next few years. But I want to hand over now to our selected speakers who have deep knowledge in the business, and they will explain how they tackle this opportunity. I think they have quite different business models. We have like large entities like SDX, a subsidiary from Swiss Stock Exchange. We have smaller venues like now Luzius Meisser, Aktionariat. We have banks. We have security houses which are operating here. So I would like, first of all, to welcome our speakers and then to hand over to Thomas Eichenberg. I let you quickly present yourself so that we don't get too lengthy. I'm looking forward to talking to you after your presentations. All the best.
Thank you very much, Beat and Martin, for these introductory remarks. Let me pull up a few slides to support what I'm going to present in a second. So first of all, thanks a lot for having the pleasure and honor to be part of this exciting panel today and actually open up this session with introducing you to the activities that Signum is conducting on the tokenization side of things. And obviously, I will also put a specific emphasis on the introduction of Synex, our organized trading facility for asset tokens that we are operating on our side as an integral part of our tokenization stack. As Martin has said, my name is Thomas Eichenberg, and I'm leading the products division here at Signum. And as such, since tokenization is a strong pillar of our value proposition, I'm having the pleasure to present Signum or represent Signum today. Maybe before we start and jump into the asset tokenization topic directly, let me give you a bit of an introduction as to what Signum does overall. I think Martin has said it before. We are a digital asset bank, so tokenization is not the only thing that we're doing or not the only activity we're conducting here at Signum. Basically, we have three strategic pillars that we're focusing on, starting with digital asset banking, which consists of fiat to digital asset gateway, custody services, 24/7 trading services for cryptocurrencies, Lombard lending activities, but then also more importantly now, staking and decentralized lending or decentralized finance services that we are aiming to and are already offering to an ever-growing client base. Second pillar is asset management, where we have a number of products that are active in the market. So giving exposure to digital assets and cryptocurrencies through traditional wrappers, also an area where we are growing steadily. And finally, the third pillar, which is in the focus today, is asset tokenization. There, our goal is really to provide an end-to-end tokenization solution covering the entire value chain. I'm going to go into more details on that in a second. And our goal is really to not only tokenize financial assets, but also real assets And I think Beat has given me the perfect pass to maybe share our initial tokenization project with you, where we tokenized investable wine. So Beat, what you wanted to achieve, we have already achieved, and we're happy to apply that to the bottle that you wanted to hand over to Martin at the end of this presentation. But that just as a start. Again, I think asset tokenization are strategic priorities, and I'm glad to share some more details with you on that today. Looking at our asset tokenization activities more closely, I said it before, it is very important to us that we look at the entire value chain. I think given where the market or the tokenization industry as a whole stands today and its level of maturity, we strongly believe that we need to provide potential issuers, but also investors, end-to-end integrated solutions in order to really bring tokenization to life and unfold its true potential. Because before we can start thinking about how can we trade asset tokens and create additional liquidity, I think we need to issue such asset tokens in the first place, which is, I think, the primary activity that we also at Signum are focusing on at the moment. We have a number of projects in the pipeline where we are in the process of issuing such tokens, which will then in a second step be made tradable and available on our secondary market trading platform. The latest among these projects is a 4 million Picasso painting that we have tokenized through the means of an ownership token, which is currently available for subscription on our platform and will then, at the end of the subscription period, also be listed on our trading venue. But going back to the full value chain, I think, again, everything starts with a primary market issuance platform where not only the technical issuance of such an asset token is in the focus, but also obviously a robust legal and regulatory framework around it. And I think you have mentioned it in your introduction words, the introduction of DLT securities or register securities has helped us a lot in Switzerland and has put us again in a privileged position globally that we can work with legislation and the legal grounds in order to really exploit the potential of tokenized assets. Based on this, then our platform can obviously handle the technical issuance of a token. That's not such a big deal once this has been cracked in the first place. We then offer, as I said, also capital raise or capital raise processes on our platform, which is handled by an on-chain subscription management process. And then in a second step, once these assets have been created, they are being made available on our organized trading facility, Synex, that we are operating under our Swiss bank license. I'm going to go into a bit more detail what it means to operate an organized trading facility, which is not a DLT trading facility, which is actually at the core of today's discussion, but it's very similar. And I think we can draw a few conclusions also from the organized trading facility that we are operating. As an additional element of our tokenization stack, we have issued the digital Swiss franc stablecoin, acts as a means of settlement on our trading facility, but also on our primary market issuance platform, because we believe that only if both legs of a trade are being handled and settled on chain, we can exploit the full potential of tokenization. And then finally, all of this is obviously integrated and seamlessly embedded with our custody solution that is an integrated part of our tokenization stack. Maybe final words on this slide. We have obviously also made up our minds as to how we aim to position our tokenization solution, where we feel we can create additional value. In the first place, our goal is to make currently hard to access and hard to invest assets more easily investable and accessible for a broader audience. And hence, we are focusing on 4 key investment verticals: financing, mostly on the equity side, then mid-cap financing, be it on the equity or the debt side, real estate, and finally arts and collectibles, which I touched upon already before with the examples of the fine wine and the Picasso token that we've issued. Now looking at Synex, our organized trading facility, a bit more closely, we have tried to provide here an overview of the different trading venues that exist from a regulatory point of view here in Switzerland, starting from the left-hand side with the bulletin board, which is actually not the trading venue. If you look into a FINMA Circular 2018-1, then the OTF, the Organized Trading Facility, is actually the first regulated trading venue. As a licensed bank or securities dealer or trading facility, you can operate such an organized trading facility if you seek a special approval for it with FINMA, which we did. And this allows us now to exercise discretionary trading of tokenized securities and other financial instruments on our platform. This is a B2C trading facility, so any end market participant can trade on such a trading facility. The same holds true for DLT trading facilities, but is then different for multilateral trading facilities and exchanges, where you need a regulated counterparty, such as a bank or a broker in between, to get access to such a trading venue. And then the third element, which is in the middle, which is basically then combining or linking these elements of non-discretionary trading, but still providing access to non-regulated customers, which means end customers, is actually now what has been introduced on August 1st, and which requires also separate license, which would also require Signum to obtain a separate license to organize a DLT trading facility. At the moment, we believe that our organized trading facility fulfills all our needs and all the needs of our clients. So we are happy that we have already obtained approval to exercise and operate such a trading facility. And finally, let me close with giving you a bit of a preview as to what this now really looks like in production. Again, in the end, the organized trading facility facilitates the exchange of asset tokens versus our digital Swiss franc through a standardized trading venue. Our clients can, as I said before, directly place orders. They can also accept orders that have been posted into the order book, and as such, then all these trades are settled immediately and directly on the platform and in the background through the means of our digital Swiss franc. All of this, again, fully embedded into our overall digital asset banking platform that our clients have access to, covering the cryptocurrency side of things through our different means where we act or interact with brokers and trading venues that are out there in the market, and handling the asset token trading through our organized trading facility, benefiting from the platform that we have built ourselves in-house from scratch. And with that, I think I would close my speech. I hope I didn't overrun, but I feel like I'm exactly on time, Martin. The 10 minutes you gave me, I have consumed. So thanks a lot, and looking forward to the discussion later.
Thank you very much, Thomas. This was very interesting to see how you organized through this organized trading facility. So this is, as we know, one of the older possibilities and not one of the trading venues which was implemented now by the new law. Interesting the approach you chosen. Now we go over to Nathan Kaiser from Swiss Digital Exchange.
Hi everybody, thank you very much, Martin, and thank you very much CVA and SECA for having me. I'm going to pick up right on Thomas's presentation. Obviously, the one thing that we are trying to do at SDX, which is a 100% subsidiary of SIX Group, is to do a regulated stock exchange. So that's quite different from what we've seen so far and from what we'll be hearing in the remaining part of this presentation. So let me quickly just explain, and I'm going to do that without slides, what our current licensing approach is. So we're using the, let me call it old law, or you could also say current law. So we're pursuing a license for a regulated stock exchange. And within that regulated stock exchange and that license, because of course you're going to ask me when will the license come, and since I don't want to answer that question, but I'm going to answer it right now, the license will come very soon, really very imminent, within days. That's when we expect it. That license will actually allow us to list securities as public securities. So that's quite far away from what Thomas just mentioned, what they are doing. Once we have these listed securities, we then use a private blockchain or a private DLT based on Corda that is integrated with the banks that are members of the stock exchange. So that's for our current licensing approach. In the future, we will be looking very hard at the DLT trading system or trading facility, as we have seen in the presentation just now with Thomas. So maybe let me say here right away, and that's sort of a part of my message, is that what Signum is doing, and obviously we'll also listen to Lamine, is very much complementary to what we are doing and vice versa. So we see this as a very clearly a larger ecosystem where different people, different players do different things. So for example, we will not do the wine and we will not do the real estate. However, I very much see the approach for tokenized assets, wine and real estate. And I'm personally a big believer, so I should be onboarding to Signum as fast as possible. I will send you the application form soon. So how do we foresee how this will work? Again, we have the organized trading facilities. We will have our public securities license. And then we have the new DLT trading system, which is something that I'm looking at and that our team or our teams are actually looking at very hard. And we do think there is a place for different assets on different chains for a different audience under different regulation. And we do see that ecosystem approach where in the long term, surely things will eventually merge and lines will be blurred. And we actually have already seen that if you read the Wall Street Journal just 2 days ago, where in a side sentence, they mentioned that Uniswap is, of course, absolutely capable of dealing with security tokens because Uniswap doesn't make the difference whether the underlying asset is a security or whether the token itself is a security or not. And maybe you've even seen today that Bitfinex has announced that they will be shortly commencing trading of security tokens, asset tokens. So I think this will be a very interesting space. We're waiting for our license in the next coming days. Then we'll be tackling the issue of the DLT trading license, which for me is clearly one of the next steps of interest. And then we take it from there. I might have been somewhat shorter, Martin, than the 10 minutes allocated to me, but I want to leave enough space because I think it's going to be that discussion between all of us, which is going to be very interesting, and I'm very much looking forward to it. Thank you.
Thank you very much, Nathan. That was interesting. We will absolutely discuss later the different approaches. And I would also like to invite our audience to submit their question to the Q&A button, which is below on the screen. We will discuss also, maybe not all, we try to discuss as many questions as possible. Now I would like to hand over to Chris Bruppacher, who will also give us some insights, not only about his project, but also about how he sees the implementation of the DLT systems and what this could mean in the future. So I'm looking forward, Chris, to your presentation.
Thank you, Martin. Let me share my screen. So my topic today is observations and outlook. I have been working with a couple of DLT marketplace projects in Switzerland and outside. And I think the space is evolving very quickly, and therefore it's important and interesting to see what could come. And we have already heard the lines might blur and are blurring, and that's exactly what I will talk about. There is, however, a certain risk that my explanations will be boring for the crypto expert. I apologize for that, but there is also a risk that my explanations are very exotic for the crypto beginner. So I really apologize for that as well. So let's jump into it. I will start with a couple of key trend observations. The first one we have seen on Thomas's slides, built towards the primary market transactions. As we expect primarily illiquid assets to be tokenized in the foreseeable future, primary market transaction will have a much bigger share vis-a-vis the secondary market transaction as compared to traditional finance, and therefore primary is an important element to think about when establishing a marketplace, and it is the first part where the investor, where the issuer, the borrower, needs to connect to the investor. That's obviously one of the main roles that new marketplaces needs to fulfill in order to compete with traditional finance. Secondly, staking, one of the most fascinating innovations of decentralized finance. Staking offers completely new opportunities on top of traditional finance, as well as new revenue models. And I think staking is one of the features that will really help us in the future to bring and connect the different digital services into the third trend observation, which is ecosystems. We will see much more composable partnerships between service providers, and we will see the technology coming more into the middle and transferable and players that had a traditional role in the middle, such as traditional exchanges and banks, to be to change into much more of a level playing field with the other players on the same technology. So I think ecosystems for projects that look into the future, that look into benefiting from new technologies, is an essential given in order to achieve success. Talking about primary and staking, I would like to show one example here, which is a DeFi launchpad. This is Occam Razor, which offers a full-fledged primary market functionality, all digital. It offers the different functionality requires for the originator of the trade. It offers full compliance and RegTech tools in order to onboard, vet, and whitelist participants. And it offers different participation mechanisms for the investors and structure to execute the primary market transaction. Currently, we see these transactions going through in DeFi on non-security tokens, but I'm pretty sure that technology like that will enter the space also on the traditional side, and security token will enter the space on the DeFi side. The fourth trend observation is automated market maker, another really fascinating innovation from decentralized finance. On the left side, we have the traditional market model, the central limit order book, where market makers and quasi-market makers offer bid and offer prices for a market to happen, for market takers and market makers to act in a joint order book. On the right side here, we have newly a similar market mechanism with regards to bringing flow together, but it's all built on digital codes. And the market is not fed by third-party market makers or liquidity providers. The market is fed by liquidity being staked by market participant direct. And the interesting model here is, and that's what really fascinates me, is that a much larger share of the revenues that can be taken out of a market is actually going back directly into the community. I also think that automated market makers, while it will not replace the traditional model per se, it will take a larger share going forward, particularly in medium type liquidity assets. So I think we will see automated market maker not only flourish in decentralized finance, but coming into the central exchange space as well. Here I have an example, IXSwap, which is a project in Singapore. It's a project that connects an automated market maker based around a smart contract and liquidity provided directly from within the digital assets with a traditional exchange model that is licensed in this example in Singapore as well, where customers can buy and sell securities. So we need to watch this space. Now, we have mentioned the traditional marketplace model with the exchange in the middle, exchange members, licensed exchange members being the transaction parties directly on the exchange and the customers and users outside. This model will continue for the foreseeable future for highly liquid assets. I'm pretty sure the DLT market model and product is, on my view, not yet fit for purpose for highly liquid products, and the traditional system has many advantages over it. But for many new use points of the digital security and the digital token, we will see, as I have explained before, new ecosystems to come up, like we see in decentralized finance, but I think more and more also in traditional finance. And I think at some point we will probably drop the decentralized and the centralized finance and see technologies converge. But this is not the end game. So here there is obviously white space on the right. I think the direction we are going to take is an integrated smart ecosystem where physical assets are included in ecosystems as well. And this is the missing part today if you look at decentralized finance. Physical objects not only mean objects of value like gold and paintings and wine. It also means vehicles. It means machines. It means all sorts of things that we need in smart economies. These devices will have their own account, will have their own rights to transact. And I think that is what marketplaces of the future need to consider, where the opportunity is therein. Now, an example here, Smart Economy, a company called Token Fabric that I'm actually a co-founder of as well, has the vision or has the intention to build digital ecosystems for industrial equipment financing. Now, industrial equipment financing is not totally ready yet for a tokenized end-to-end model, but this is clearly the intention we want to go for. And interestingly, the transaction in going forward doesn't look in such a graphic much different than it looks today. Also, in 100 years, a transaction will have a buyer and a seller. Now, we will have much more technology and not much more technology function supporting the process in the middle. And probably most important, the buyer and the seller and all the transaction partners could not only be humans, it can be machines and it can be smart contracts. And here the ecosystem connection comes into play again. This entire model will be possible in the not so foreseeable future without any human interaction. We will have machines, we will have vehicles, we will have smart contracts that make business with each other. And somewhere on the way, we might have exchange functions and marketplace functions. And lastly, we will have these protocol tokens that we already see today that are booming currently in decentralized finance, that support the ecosystem, that cement it together, that incentivize the participation of these emerging ecosystems. So if I build a DLT marketplace today, if I want to look at new emerging opportunities, I think this smart ecosystem space is something to look at and something to go for. That's all from my side, exactly 10 minutes on my clock. Looking forward to the discussion afterwards.
Thank you very much, Chris, for your interesting insights. now I would like to hand over to Luzius Meisser from Aktionariat.
Hello, nice to be here. So as we've heard before, we all operate at a somewhat different scale, and we are the ones that basically plant the seeds for companies to grow maybe later into bigger markets. So when people talk about the new law, there's one thing that is often not mentioned because it's considered not so relevant. I, for one, consider it very relevant. So what we have here is an exception for non-commercially operated trading systems. So the law is defined in a way that it says you only need a license if your trading system is commercially operated. And this is our recipe. So we say we don't operate an exchange, but we provide the tools for issuers of shares to create small non-commercially operated exchanges based on smart contracts without any operational costs. So it's all automated and they don't need to worry. They can create a small market for their shares. So it's actually not that hard to adhere to these restrictions. You just need to not make any money and not take any client assets, and then make sure you don't have any ongoing client business relations. So that means you should just have some ad hoc trading, and then you should be more or less fine. More details on that will be discussed in the upcoming update to the secondary market circular. But we have a circular from the Blockchain Federation Switzerland that discusses these kind of things, how to create a market for security tokens. And we will publish an update somewhere later this year, I hope quite soon, where we go into more details about the legal dimension on this. So in short, we are about directly connecting the companies with their investors or shareholders. So this is also one of the promises of the blockchain is disintermediation, is to cut out the middleman and to make sure that people can interact more directly. And that's how we do it. So we have different tools that we offer. One, the core tool is what we call the broker bot. The broker bot is an automated market making smart contract with a small liquidity pool behind that. This liquidity pool is fed by the issuer. So it's much simpler than Uniswap. And that way the issuer can offer shares to the public or buy back shares from the public through its own website. And it's being used by ourselves. So if you want to become a shareholder, you can go to our website and buy a few shares. It's also been used by a few other companies. Recently, the men's underwear company Tebow did a token offering using our technology, and they raised $500,000 over the weekend. So I think we might be onto something here and help small companies to go in the direction of stakeholder capitalism, to involve not only their employees, but also their clients and suppliers and everyone who believes in them. And they can grow together with their stakeholders until they are maybe ready for SDX or another bigger exchange. So another part of our tool set is a corporate dashboard that the issuer can use to manage the market, to make sure that there's liquidity, to see how many shares they've sold or bought back usually. So it's kind of a mixture between primary and secondary market. Most shares that are being sold for the first time. So this would be considered a primary offering. And there are actually only very few shares that are repurchased and maybe later then offered again. So, and the third component we have is the portfolio app. This is for the investors, so they can see what shares they have. This is an Ethereum wallet, so we are all building on Ethereum system. And at the moment, this is unique. So you need to hold your private key, which is kind of an obstacle for the mainstream audience, but it's still it's convenient enough for early adopters. And what I hope for here is that sooner or later, Signum and other financial intermediaries help their clients buying shares through decentralized systems like what we offer. So we can also have clients that do not feel comfortable with managing their own key and feel more comfortable having their keys managed by SEBA or Bitcoin Swiss or whoever is willing to do that. So as I said, so the company can manage the market. So it's one big issue is when you want to create a liquid market, you cannot just list the token. So most cryptocurrencies, they are not very liquid because no one is providing liquidity. So it's not enough to be listed on Bitfinex or another exchange and to be present in order book. You need someone who sets a price. And I think at for an entry-level company that has no analyst coverage, that has no professional market makers looking at it, the easiest way to get in is to let the company do some market making and let the company define the price and also the dynamics, how the price is adjusted as demand goes, as the shares are sold or repurchased. So in short, we offer a shortcut to public markets for Swiss companies. So usually Swiss companies go through a labyrinth of different options. Some of them die along the way. Some of them have an exit. Some of them have different financing rounds. And we, illustrated by the blue line, kind of offer a shortcut where you can very early on involve the public in building your company and have your stakeholders involved in making the company big. So, and this is, I think, a very interesting promise because it turns private equity into open equity, and in the end, they end up with the nice. So the investors, they can accompany the company that they like on its journey towards becoming bigger and bigger without the founders being forced to do an early exit or so. So this is one of the things that I want to enable. I want to enable founders to stick with their company and not have an exit just to cash out. They should be able to maybe sell a few of their shares early on to get some of the fruits of their labor, but such a system would enable the founders to stick with their company much longer and to have it grow to a much higher scale. And this would probably also in the end lead to much more listed companies on the stock market. So today we are only with about 230 listed stocks left, and this is less than it used to be in the past. And I hope that I can contribute to turn this trend around and to make sure that that more and more companies are publicly traded in Switzerland. So that's it from my side. Here you see my email and the link to our investors page where you can buy and sell our shares.
Thank you, Luzius, for the insight. Also, again, another approach, very interesting. We'll discuss later about this. And now, last but not least, we have Lamine from Taos, from Geneva. Welcome here on our panel, and we're looking forward to your presentation.
Good afternoon, everybody. So I'll give a few words of what we do and focus a little bit more on our digital asset marketplace. So, our premise, what we do, what we want to do at least, is we want to allow our clients to manage any digital assets, with one unified platform. When I say any, it can be cryptocurrencies, it can be tokenized securities in the proper way, down to the smart contract function level. Digital currencies, we have been working with some leading banks, integrating global stablecoins. We have also announced a collaboration with MasterCard. So we also believe that digital currencies are coming fast. As opposed to some of my colleagues that have spoken earlier, we don't come at all from, I would say, financial services envelope. We started building the tech from the ground up. So roughly, we work today with the full spectrum of financial institutions. It can be systemic banks, investment banks, private banks, actually both Swiss crypto banks, SEBA, Signum, use our tech, retail online banks such as Swissquote as well. And in the same way that somebody mentioned it in the beginning, you know, some of our clients were tokenizing assets, they had demand for it, but they were missing, you know, a regulated marketplace that allows to do so. So we basically built it also from the ground up. So basically what we do is we want to provide an infrastructure which is actually totally open architecture. So our clients do not need to subscribe to any of those services in bulk. If they want just, you know, to do crypto, they can just take the custody. If they want to do tokenization, they take tokenization. If they want to onboard in our marketplace, they can do it as well. It was totally, basically, we work totally in open architecture mode. And the idea is to give choice to the clients. If we now talk about TDX is our marketplace that we announced and launched actually last May. Basically, it's the first really independent marketplace in the space. We are totally agnostic. We master the full technology stack. So again, as I said, we want to give choice. So if clients want to tokenize on Ethereum, public or private, they can do. If they want to do it on Taos FA 1.2, FA2, they can do, and others are coming. We're also totally agnostic in terms of underlying. It can be equity, debt, real estate. By the way, crypto and NFTs as well. You know, our technology is allows to identify and process. In other words, you know, perform proper asset servicing independently of the underlying. I think what's very important also is we aim to be obviously in that space independent. So we work with the full spectrum of financial institutions, with banks. We don't want to become a bank, and we've never wanted to be so, nor do we want to be a stock exchange. Our core focus really is private assets. So it can be anything that is not listed, fast-growing SMEs. It can be also large companies that do not necessarily want to be listed on the stock exchange. And we have also now other segments such as NFTs that are coming. As an example, we have made a direct, you know, listing of Audacia, which is a Swiss-based company, e-commerce company doing 30 million revenues and growing fast. There is a private placement, 50 million plus, that being made by a large Swiss bank for one of the large Swiss, for a large Swiss company that we're doing together. There are also a couple of financial institutions that are willing, with their asset management business, create liquidity pocket for less liquid strategies. So we're working on those types of things. And I agree with what Nathan said. In the end, it's still early days, but if I may to summarize it, I would really use the e-commerce, parallel. There is no reason why private assets, securities cannot be as easily, acquired or transferred as if you were buying a book on Amazon. The regulation allows for it. The technology allows for it. The main unknown is really the speed of adoption. And we're here, for the long term. Our fixed costs are very low because all the tech is ours. And voila. So to me, and to us, our deep conviction is we are not really looking at public markets. Our deep conviction is private assets are here to be digitized and easily transferable. And all the elements of, I would say, the ecosystems are now there. And it's, I guess, the work of you guys in the Crypto Valley Association, some of the banks that are here today, infrastructure provider, to work and to to kind of educate the market so that the market actually grows faster than slower. That's it on my end.
Thank you very much, Lamine. This was very interesting. Now, what I have seen in all these discussions we have had now is that I think Taos also you regulate as an organized trading facility, right? Did I understand this right?
That's absolutely correct. When we filed for the license, the DLT license didn't exist. And to be honest, we feel comfortable with what we have today.
So it's interesting. I mean, if we see today's presentation, we don't even have one DLT trading platform license. Signum and Taos, you're operating under a similar license, I would say. Signum as a bank, you as a security house, if I got it right. And then Luzius is trading. I mean, you are just providing a system to, let's say, the company that they can submit and sell their own shares, and so you're basically just a tech provider without any licensing. Nathan with SDX is going for a regular stock exchange license, and so was it useful to implement in our law? This is now the question maybe for each of you. Where do you see, or why didn't you opt, or who do you think will opt for these new trading facilities available?
Martin, I'm happy to start the discussion. Arguably, we're probably the one player that everybody's looking at first and foremost for this new license. And my personal takes, I'm not speaking on behalf of SIX or SDX, is that everybody, and everybody really means everybody, all of us, the companies, the individuals involved, but also the lawyers, the auditors, simply need some more time before we'll see license filings. I think this just takes more time. I actually have said so at the conference last week in Zug, that maybe strangely enough, the law change was faster than we all thought. And strangely enough, and I'm looking at Beat, who I know from before, I think, in Fieri, of course, strangely enough, maybe the law and the regulators and the legislators and the lawyer this time were faster than the companies involved. So I think usually everybody says it's the other way around, but I really think that all of us in this ecosystem here just need a little bit more time. Yeah, that's my personal take, but happy to discuss other opinions.
So yeah, I can build on what Nathan said. You know, getting a license has been a long process that took more than a year. And, you know, I'll be very pragmatic, at least our experience, you cannot apply to a license that does not exist. So when you apply to a license, the DLT license didn't exist. That's why we selected that one. And again, we would be more than happy to consider switching to it. But as far as we are concerned, we believe that what we are allowed to do is more than enough for our current needs.
Yeah, I can only second that from Signum's point of view. I mean, I said it before, I think we were allowed to operate an organized trading facility under our existing banking license. So for us, it was kind of the low-hanging fruit, if I may say so, to establish a trading venue for asset tokens in the absence of SDX, which we truly hope will get their license very soon, and we will all be able to connect to SDX to also bring to add them to our ecosystem that we all jointly have to grow, as Lamine said before. I think it's our all responsibility to make this work. And again, as Lamine said, also ourselves, we're focusing on bringing more liquidity and better and easier access to private markets or private assets. and then we leave the tokenization of blue chip stocks and the likes gladly to SDX, and looking forward to be able to connect to them very soon.
Yeah, interesting. We'll see what will happen, and maybe we can do then once we have some new actors in the market who will apply for this license to rediscuss this. I have a question also to Nathan. I mean, you're aiming to become a regular stock exchange just with digital infrastructure, if I understand this right. What do you intend to trade on your platform? Is it also cryptocurrencies, or is it only securities, so-called asset tokens, or also other tokens?
Absolutely, good question. So I think, of course, there's a lot of confidentiality as a once licensed, and even before our pipelines of products and offerings is really subject to confidentiality, because we're then a part of that public market. So I can't really speak in specifics, but we will start off with securities, because that's what the license is for. Within securities, it's fair to say that we'll start with fixed income / bonds, and equities will come later. I think that's a very first answer to your question. The cryptocurrency part, means the non-securities part, is very big on our screen, and we're spending substantial amounts of time and efforts on that part, but that will also come in a next stage. So immediate stage is really obtaining the license from Vyoma, and then starting with a fixed income product that is a security, and then take it from there. We could maybe have a discussion here, or maybe that's the very best place to have that discussion. The question is cryptocurrency exchange versus a broker model. Is there space? Is there a commercial need? Is there a sufficient commercial need within Switzerland for a spot trading means an actual cryptocurrency exchange? Is, I think, a question that's out there, versus a broker model like maybe Bitcoin Swiss has it, or Coinbase has it, or Crypto Finance has it. So these are questions that we are currently asking ourselves. What's the commercial need next to the regulatory possibility under the new DLT law to actually operate a spot trading cryptocurrency exchange? But I'm going to throw that into the group here. Yeah.
If I may, I have another question which I'm wondering about your thoughts about. I mean, Switzerland being a small country, but still very national-oriented country, Switzerland not being part of European Union, so with a very small, let's say, buyer market for our securities, how do you see the developments? Will we be able in Switzerland, or our marketplaces, to be able to play now a leading role, being at the forefront of these developments with the DLT law, which we have implemented? Will we be able, to attract also foreign investors on our trading facilities? What's your thoughts about this, please?
I'm going to do a quick answer. I don't know if you're asking me, Martin, but I can only talk about public listed securities, because that's the part we're taking care of, or are going to take care of. And for public listed securities, jurisdictions are very important. It's very jurisdictional, and I really mean it when I say, as a lawyer, very. So it's not even just equivalency issues from a CSD perspective. It's investor protection and so on. So it's not there's no easy road to transact internationally for publicly listed securities. But I'd be very happy and very interested to hear from maybe Thomas and Lamine, how you see that with regard to private markets for asset tokens.
Look, to me, we are in the very, 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 very early days. So do not expect private assets to be liquid as Tesla. Sorry, my daughter is crying. Sorry. But to me, voilà, so we're here in the early days, but is there a problem we are solving? The answer is yes. Are we doing it better than the existing, alternatives, which are mostly paper-based? The answer is yes. The question mark for me is really the speed of adoption. And, we don't really only focus on, private companies, mid-cap. I think to me, what is actually very good in Switzerland is that, the law allows to do many, many things. For a Swiss-based company, we have two businesses now, the tech side where we can scale anywhere we want from, China to the US. But on the regulated side, I have to say that I would say any Swiss-based company that doesn't have a footprint in Europe is penalized. So market access is really, an issue, but this is not just, can be any bank which operates out of Switzerland. They need to have something in Europe to be able to attract or at least market its services to European clients. But this is more of a systemic problem than anything specific to DLT. But in long story short, there is a huge potential. We believe that you can differentiate yourselves by providing the best tech out there, the best possibilities and choices to the market. And as we said earlier, I think the joint effort of every single, let's say, player will make the market increase. On our side, we're seeing it double year on year. So basically, and we continue to foresee it double over the next 2-3 years at least.
Any other thoughts, maybe?
Yes, so actually a blockchain is supposed to be not care about jurisdictions and not care about borders. And one of the issues when you use these local licenses is of course that you then are stuck locally and with the local possibilities of the license. But if you have, if you try to go fully disintermediated like we do, our clients, they are able to sell shares to whoever they want all over the world. Of course, they have issues when they do marketing. Then you need a prospectus, but there's for Europe, for example, the reverse solicitation rule. So if someone finds you and wants to invest, you can accept that money and say, here are the shares, welcome among our shareholders. So I think by going the disintermediate way, you can be global much quicker. Of course, you then have very a lot of other obstacles that you need to take care of, but overall it's not shareholders are free to transfer shares. So if I'm a shareholder of a tokenized company, I can transfer the shares to someone in Germany or the United States. So it's my property, and this is also something where blockchain technology and the idea of shareholders or shareholder rights is very well aligned, because blockchain technology gives you very strong property rights, and it also means it protects you very well as an investor from the company. The company cannot just take your token away. It gives you a strong position of ownership, and this also enables decentralized worldwide markets and maybe an internet of finance.
Interesting.
Maybe a couple of thoughts to add.
Yeah, please.
As an issuer today, obviously you have to analyze what your options are, and you have the traditional finance that goes through the banks and via the banks to the investors, and most of the investors are still on the traditional side. And on the other side, you have the digital way, where the connectivity between the buyers and the sellers, the issuer and the investor, is only partly established at this point. So in many ways, the DLT security is not fully, I would say, competitive to the traditional way for a traditional issuer of security or a borrower of a loan. But this is changing fast. And what Luzius says, that this intermediate path is very important, because there is really where we see most growth at the moment. And technology will not stop at the border, and we will see more connectivity between decentralized finance and centralized projects. And I think we need to be very conscious of that space. And it will be a regulatory challenge to really control this from a regulatory point of view. But it will have to go hand in hand. And I think with Switzerland being an early adopter of new rules, and also having a lot of projects here on the ground, we have a unique opportunity to establish the connectivity on one side with traditional finance, so that the investor can invest in a security, whether it's traditional or a token. And we have the opportunity to connect to decentralized or disintermediated processes in a compliant way, in order to benefit from the evolutions on that end. With the regulatory starting point we have a huge opportunity.
Interesting. I would like to ask you another question. I think Lamine and also Luzius and Chris and all of you, I mean, I think you've also brought up the thesis that the threshold to be, let's say, for a company publicly traded in a way or another will be lower. So I think, as I have understood it, it's a clear goal. And I think this is also very interesting, maybe for our audience, let's say, to have SMEs, smaller companies, for whom it would be too burdensome, let's say, to start an IPO, because this is too expensive, to access public markets through now the issuance of a digital security. What is your thoughts on this? Do you think this will really be an important player? And maybe also, what kind of costs would you expect for an SME to get its shares traded on a trading venue? And maybe the third question related to this: once it grows much bigger, will there be, you know, like a way out from this digital public traded venue to a regular stock exchange, if this would still be needed? Or do you harm your position for the future once you go to such a digital exchange?
I can give you a bit of feedback of what entrepreneurs tell us, right? Some of the entrepreneurs we talk to, you know, almost systematically, they say, okay, especially, you know, the younger generation, or even like a generation which is a bit older than me, but you know, which have basically a modern way of managing their companies. Very first basic question, you know, most of them have employee stock option plans, incentive plans. They say, okay, we want to allow our employees to cash out. Can we do it? The answer is yes. Others, you know, want to unlock kind of liquidity for the existing investors, attract new investors. Obviously, if you provide the possibility to get in and out every month, every quarter, every semester, actually it fully depends. It's quite, you know, interesting value proposition. The liquidity, to be honest, is not guaranteed, right? It doesn't mean that you are admitted for trading, that you will have a debt of, you know, Tesla, but it's already good value proposition. And in terms of costs, to be honest, it's marginal, right? I don't know how others price it, but there has been a phenomenal work done by the CMTA, Capital Markets and Technology Association, in relation to tokenization of company shares. The smart contracts already exist, it's plug and play. You basically need to adopt your articles of association, have a decent lawyer working with you, and in a couple of $1,000, maybe a bit more, if you want to basically have a full-fledged service, you can be admitted for trading. That's our experience, at least.
I fully agree. See completely the same. I think it's the enablement of, let's say, a standardized option for liquidity, or be it an exit option also. I think it's definitely something that this brings to the table now. And the other element is what you said, Martin, in the other question. It's definitely about providing access to such unique investment opportunities in terms of private assets to a broader audience, to a broader group of investors, to diversify their portfolios on the one hand side, but not only for, let's say, for financial or risk return optimization purposes, but also I think for a lot of these private assets, there is also an element of emotional investing, right? You want to be part of something. You want, maybe as an issuer, you maybe want to make not only your employees shareholders, but also your clients. You want to make shareholders. I think we have a beautiful example of Neon, who did that recently when they had a capital raise where they engaged or managed to get 1,700 of their clients to become shareholders as well. And then eventually we're going to tokenize these participation certificates for them to then at the later stage hopefully enable also secondary markets for that. I think we really now using technology enables us to make this possible at a fraction of the cost that you would see when leveraging traditional capital markets or traditional technology.
I think this has a really huge potential if we see this, and if we see the structure of, let's say, Swiss economy with really great SMEs, but with no direct access to financial markets. Obviously, I mean, this is a very compelling idea, and I think we at CVA and also of SECA, of course, should also think about how we would, how we can position and help our members to be in there. Another thought we have already discussed it also at SECA's level is, maybe also I would be wondering about your thoughts about this. I mean, if we see in private equity transactions, I mean, it's a very, lots of paperwork to do, of course, with some individual clauses, but very often also with quite standardized clauses. Where do you see also the opportunity here to facilitate, let's say, this kind of transaction through digitalization, tokenization?
I think we definitely see potential there as well. You said it. Whatever is fairly standardized, we can also implement into a token smart contract eventually, or we leave some of the clauses be part of the tokenization agreement. So definitely, I think we can definitely aim to lower the investment barriers or the thresholds or minimum investment sizes for such investments if we manage to digitize the processes and contractual clauses around them. Definitely.
I want to jump in here, I think, because I was going to say that it's not the tokenization itself that allows, in my personal opinion, that's not the tokenization itself that allows for an easier access to financing. It's rather the very standardization, Thomas, that you just mentioned, and so cost savings through standardization, but not the tokenization on its own. It's not purely the tech that enables something that wasn't enabled. It's the cost saving through standardization that makes things cheaper, where before some things were cost prohibitive. Yeah.
I think if you only look at the cost saving perspective, then you are not capturing the full potential, because it's like saying email allows us to write letters faster. It's kind of true, but it changed the pattern of how we communicate. It wasn't just faster, it changed how we communicate. And the same I hope to happen with tokenized assets, that it changes the way we trade. And one example we see today is Uniswap, which some believe it's clumsy in comparison to a traditional market. It's a hack that they did out of technical necessity, but I don't think that's the case. I think they have found a new way of liquidity provision that's actually much more efficient than the traditional order book, and much more elegant, because it's not each. So if you put in a market or a limit order, basically you are not putting a point into order book. You're putting a whole range of orders and a continuous order space, so to speak, where you then are providing liquidity, which I think is a true innovation in finance that traditional stock market guys didn't come up with. So that's one result of having programmable money, is that the programmers are suddenly in charge of financial topics. Of course, it often goes wrong, but sometimes they find a nugget.
Luzius, I'm all for that rabbit hole of disruption, and I think maybe the comparison with email. I very much agree with what you said. I think the tokenization, that standardization, is exactly what was disruptive with email. It's that email wasn't indeed faster than normal mail. It wouldn't have been disruptive if it had been as fast or as slow. But then it put in that standardization that there was only one email protocol. Before we had, obviously, SMTP and all that, but there is only one email protocol, and that standardization is like the containerization of international trade that allowed for business models with both emails and tokens and containers that just didn't exist before. Yeah, I'm very much with you. Yeah.
So I think we will have another 5 to 10 minutes to talk between us. I would like to, many questions, they were replied already in our chat, so I don't take them up again. But we have here Derek Q, the Stockalp, who asks us, where do you see the key next areas of innovation in the coming years in the space, tech, reg, instruments, other? What's your thought on this? I mean, now we've been in an extremely dynamic, in my opinion, in an extremely dynamic environment. We still are a bit in the fog, even though visibility gets better than it was the last few years. But I think, also regulation-wise, lots of stuff has happened here in Switzerland, will happen in many other countries. Anyway, the differentiation between tech provider and intermediary probably will also be a point of discussion, because, there is, of course, regulators don't want to create thresholds where you get around, so this will be, but maybe what would you think as important development for the next few years?
I can try. Look, to me, in the area where we are, actually, standardization is something very important, and DVP, delivery versus payment, is critical. So I know the stance of the Swiss National Bank, we know them a bit, but there is, if we can, the technology exists, it's already working quite a bit. If from a regulatory perspective, we can have, global stable coins that would facilitate settlement or DVP transactions that would make a killing. To be honest, that's a deep conviction we have. The second big challenge is, there has been a question which blockchains will prevail or are prevailing. There's a lot of multiple blockchains coming, with smart contract capabilities. At some point, there'll need to be 2, 3 that will emerge, just basically to make things easier for everybody. And the last one, which is not related to our business, but which to me could have made things absolutely, fluidified. I always try to sit in the shoes of the customer. The e-identity. So the law didn't pass earlier this year, but if we had something like an e-identity, you would basically be able to sign documents online and digitize what, the remainder parts of, the value chain. That would also streamline and smoothen interactions. That would be for me the three big things over the next, I would say, 2-3 years.
I see more disintermediation driven through technology and solutions innovated in decentralized finance. So, I mean, the innovation and the solutions are just fantastic and offer end-to-end solutions where traditional financial services provider are really pushed back into their core capability, which is I think which is distribution, which is risk-taking, which is an important part also going forward in the financial system. But they will not intermediate all the processes. I mean, an example is the primary market process. You can really automate all the aspects, maybe besides the large-scale risk-taking and the potential distribution to institutional clients. But the entire process, and particularly the compliance process, the onboarding process, the wire process can all be automated. You don't need an account with, let's say, with a Swiss bank or with a German bank or with whatever bank necessarily in the future. You might need it to add some trust elements, but you don't need it to do all the services that are possible on technology going forward.
From my side, and it has been said before, I think what's going to slowly come and place to watch, and has been said today before, is these decentralized exchanges for asset tokens, security tokens. I think that's a space that's going to happen with or without us, and with or without the legislators, and with or without the regulators. So I think that's a space that's going to be interesting to watch.
Perfect, gentlemen. I thank you very much. You have been here today. It would have been great, and I hope in the next discussion we will have also some female presenters who are coming into this very interesting field of trading venues. I am sorry, there was a certain discussion on LinkedIn about I did not take care enough when I selected my invitees about diversity. I excuse this. I want to mention again that we had at our last event, it was a women's only discussion for venture capital in blockchain space, and we want to make and will make sure that also diversity will remain a top priority here. But I think, and this is the important thing, it was a very interesting discussion, very interesting presentations. I think what struck to me now is that we have now some very qualified participants in this market with a very clear vision where they want to go. This is great. It's interesting that they all opted for current or for old regime licenses to get into this space. So we'll have to see what happens in the next few months and years. And thank you very much for presenting and being so open with us. Thank you all to all the participants also to attend this meeting, and let's enjoy the last hours of Sunday of this beautiful day we have here. thank you very much and hope to see you very soon again.
Thank you, Martin.
Thank you. Bye, everyone.
Bye.